Good afternoon. My name is Jeffrey Okafo. Welcome to class. Today we're looking at Binance as a platform, as a trading platform for cryptocurrencies, and we'll just take the next few minutes to navigate. This is the desktop app. You can see my account and my email address there clearly stated. Okay, so major thing we do on Binance basically is, of course, buying and selling. But I've noticed that most traders just pay attention more on buys. So that's to say they only focus on when the currency or the assets dips, and then they can buy from the dip. But if you look at the options available, let's click on any of the pairs. Okay, so if you look at the options available on the exchange sites, you will notice that there is, in the auto book, you have the chance to buy, as indicated here, and you have the chance to sell. So why do most people just focus on buys and then ignore the sell button? Of course, for the reason that it is only when a coin is mooning or in a bullish form, or it's going up, let me use a local balance, that most people think it's the best time to buy. Okay, but also the reason why there's a sell button here is for you to be able to sell after a coin had bought for a very long while. Let's say coin went bullish for several weeks and has gotten to a particular resistance point. Right? Resistance point. So for resistance is something or anything that stops you from stops the market or the price or the asset from going further up. Then it has what we call a pullback, and then the sell begins or the bearish run begins. Okay, so there is both the buy and the sell button. There is the buy and the sell button. This is very key and is important as traders, new or old traders, to understand. So I have the liberty to join this trade, this particular currency, this particular crypto asset, USDT, is BIDR, and buy along with them, maybe to this price point, and then also decide to sell with them back down. In both movements, in both market movements, I'm going to be making profits. Okay, I'm going to be making profits. So you are either a buying person or a selling person. All right. So if we look for, let's say we search for a crypto asset that had been mooning for a long time. One of them has been BTC, particularly Bitcoin has been mooning for a very long time. So if we add that and look at the chart, the persons who are able to understand the sell part of the crypto trading market are the people who are going to be enjoying the current bearish run of the Bitcoin, or even of Binance coin, or even of Ethereum, or of several other coins that had peaked and are about to fall. Okay, so but for those who just wait and set the price for a pending order, your earning is just going to be one way. So the person who understands how to sell also enjoys good volume on when the market or when the price of the crypto asset is dropping in the market. Okay, so so now what determines what determines what you buy or sell is actually understanding of the market structures. The market structures will include your support zones, your resistance zones, at what points should I enter if a price is ranging. If a market is ranging, do I need to wait for it to break through or just enter? What are my how much do I have in equity, or how much do I have how much do I have in equity to trade with? Now these are some of the things and the key things we need to keep in mind while running our analogy and understanding why we take certain trades. Now it is not important for a trader to just come in, see a bullish market and jump in without having a reason why they do that, or to come and see a bearish market and then jump in without having a reason why they do that. Okay, so this is just for us to be able to understand to understand and look at the whole interface of, look at the whole reason why traders take a particular trade. Okay, so I am holding this particular coin. I've been holding it for several days now, and the greatest anticipation of this coin is to rise. It has flattened, it has ranged for several, the time frame here is daily, so it has ranged for several days. As you can see, it has ranged for several days across the sparks, and we're beginning to have the attempts at breaking up, right? Breaking up for the buy. Now, anticipation for all of us who are in this trade is that this pair would buy up to this. Why did I choose to buy the pair? I chose to buy the pair because it had done several upward moves, and then, like, particularly when it was launched, right? After it was launched, price crashed and went further down below the entry price. In fact, very well below the entry price. So very well below the launch price, the price at launch. So today we are looking at the possibility of price going back up to the point where it was formerly it was before it fell, right? So that is why you buy. So you buy a coin that had dipped very well, perhaps below or even more than 150% below its point of entry, or the previous low, according to how we say it in the trading parlance, the previous low, or the lowest of lows, or the lower lows, either way, the previous low. Then you buy from that point, and then you begin to go up. You also sell a market that has peaked, that has gone above, well above several highs, or a particular high, and then it drops. In subsequent videos, we are going to do analysis and discuss on these items to watch out for before you take your trades. Don't forget that the major things that move the crypto assets in the market are economic news. That's information about what big investors, or which big investor is putting in how much money into so assets. So you find the coin booming or bullish or mooning, as the word is. Now, if those investors pull out their funds, you also find the coin becoming bearish. It's like the simple law of demand and supply, right? The more money you pump into a commodity, it pushes up the supply, because there will be so much money to buy the commodity and push it out there in the market, right? The moment supply is withdrawn, scarcity comes in, and then it begins to drop. So these are just the short interludes, and just a short video to explain a few of these backgrounds. Also, if you do not have a Binance account, I'll be dropping a link under this video for you to create your account with Binance and get started. For starters, at least I say fund your account with as little as at least $50. What this means is that you might not be able to take long-term trades, right? You might just take short-term trades to build your account. So $50 for starters. If you are well able, you can do from $1,000, $500. So you can allocate at least $100 per trade, and perhaps some short-term, some long-term trades, because you have seen trades that run for upward of 6 months and has done close to 6,000%. We have seen trades that run upward of some 3 months and have done 2,000. So the whole essence of this is to be able to help us earn from the crypto space and not be panicky about every bit of news out there. So thank you until I come here again, where we'll check the analysis on the we'll do our drawings on the resistance, support, and the ranging points, as well as the trend and trend lines. I will come back again for the next video. Thank you.